Dear students, today's session is on interest on debentures. As you know, the companies have to pay interest on these debentures half yearly or annually. Company is required to pay a fixed rate of interest on debentures. This may be paid half yearly or yearly. So it's a kind of fixed expense for this company. Whether there is profit or not, company have to make the payment of debentures interest. So whether the company is earning or not, that doesn't matter since it is a fixed expense. Company have to pay even if there is profit. So that's why it is known as interest payable on debenture is a charge against profit, which will reduce the profit. This interest is a fixed expense for this company. And company is required to deduct income tax, that is known as TDS, as the prescribed rate before paying interest. So interest on debenture is a kind of income for those debenture holders. So they have to pay tax on their income. So here the company should deduct the tax amount from the interest before allocating this debenture or before distributing the interest amount on this debenture. So company is required to deduct income tax at the prescribed rate before paying interest to the interest holders. So if if a debenture holder is bound to get 1,000 rupees as interest, and if 10% tax is to be paid on these debentures, so the tax will be 100. So the company will distribute only 900 rupees to the debenture holder, and this tax amount, that is 100 rupees, will be paid by the company to the income tax department. That's the case of tax deduction in the debenture interest. And the amount of tax or deducted has to be deposited with the government, I mean with the tax department. The present rate of tax is 10% for listed debentures and 20% for unlisted debentures. So it's the 10% for the listed debentures and 20% for the unlimited debentures. That is, the tax payable on interest on debenture is 10% for listed debentures and 20% for unlisted debentures. Let's move on the accounting treatment of interest on debentures. When the interest due, as you know, half yearly or annually, the interest will become due. So whenever the interest is due, our journal entry will be as here: interest on debenture account debtor, the actual amount of interest, say it is 1,000 rupees. Interest on debenture account debtor, suppose it is 1,000 rupees, to debenture holders, to tax payables. So first of all, we have to deduct the tax. Suppose the tax percentage is 10%. On this 1,000 rupees, tax will be 100. So the remaining portion will be paid to the debenture holders. So the debenture holders will be get 900 rupees. So this is the case, the interest make due. So here the debenture holders account credited with 900 rupees and the tax account credited with 100 rupees. The next case is payment of interest to debenture holders. Now we have to pay this 900 rupees interest to the debenture holders. So the journal entry is debenture holders account debtor 900 to banks, the payment of interest. Debenture holders account debtor to bank. That's the case. And the next case, on transfer of debenture interest. On transfer of debenture interest account to profit or loss account. Since debenture is a fixed expense for this company, right? So all the expenses should be debited on the profit and loss account or the statement of profit or loss. So the journal entry will be profit and loss account ledger or statement of profit and loss account ledger to interest on debentures. So the interest on debentures is 1000. Interest on debenture is 1000. We have paid only 900 to the interest holder, but 100 rupees tax is there. So our interest expense is 1000. That amount to be debited to the statement of profit or loss. And next, there was 100 rupees debenture interest collected. I mean debenture interest, a tax on debenture interest collected. So the same is to be distributed or the paid towards the government officials or the income tax department. So the amount now we have to pay back to the income tax department. So income tax payable account ledger 100, the tax payable is 100 to bank. So this is the case of interest on debenture. First we made interest due. At the time of making interest due, we have to deduct the tax from the shareholders amount. So here I have deducted the tax and a new account is opened, income tax payable account. This tax amount is kept with the new account called income tax payable. And next, the amount of debenture payable to the debenture holders is paid to the debenture holders. Here is the case, debenture holders account ledger to bank 900. The later the debenture amount is the interest on debenture amount is transferred to the profit and loss account. So here is the interest on debenture amount. The same amount is to be transferred to the profit and loss account. Profit and loss account ledger to interest on debenture account. And here we have collected 100 rupees tax. This 100 rupees tax is to be paid to the income tax department. So the amount will be, or the case will be, income tax payable account ledger to bank. So this is the case of interest on debentures.